All right, good evening. So, today, what I'm going to explain to you is yesterday we learned about break of structure in the market, break of market structure to the upside and to the downside. Now, today, what we are going to be talking about is volume gaps, inside bars, and let's just start with those two. First of all, inside bars and volume gaps. So this blue candle right here, this is an example of an inside bar. The body of the candle is in the middle. These ones here, all these rejection candles, not all actually, but something like this red candle here, an inside bar, this red candle here, an inside bar. Inside bars are everywhere in the market. This blue candle here, an inside bar. This blue candle here, we can also consider it as an inside bar. Inside bars are on every time frame in the market. Now we are going to talk about volume gaps. Now, what do I mean by volume gaps? Volume gaps occur when price is moving with speed to a direction. Now, this is today's price action when we are selling in the afternoon. When I took this trade, I entered from this. Now, as you can see, this region here between the two candles, there's a space. That is a volume gap. This was where I entered the market from in the afternoon. This is a volume gap right here. Now, you see the arrangement of these candles. They are not arranged properly. They are not arranged properly. Like as you can see here, this one closed, then this one opened, then this one opened, then sold, then closed, this one opened, sold, bought. They were arranged properly here. But when it got to this place, it was not arranged properly. If you can see what I'm talking about, it was not arranged properly here. This is an example of a gap in the marketplace, a volume gap in the marketplace. Now, from what you can see on the 15 minutes time frame, which is making it more visible, this is a gap in the market. It's a gap, speed that the market was in a hurry to go to wherever it was going to. That was when these gaps were created. Then whenever you see an arrangement of candle patterns in a way that they are not supposed to be arranged, like the one I showed you on the 5 minutes time frame, you see the arrangement of the candles here. This is a volume gap. This is a volume gap, but we don't use small time frames, or we use higher time frames. On the daily time frame, this this area right here between the two candles, there's a space between it. That is a gap. That is a volume gap. This area right here between these two red candles, the middle of it, there's a gap there as well. That is a volume gap. This area here, you can see this blue and this blue, there's a gap there. Then the arrangement of these candles, there's also a gap there as well. So as the gap that is on this daily time frame that price used, price now sold, then bought to where the volume gap is, then sold. We use it for entries and confirmations some of the times. So I have showed you examples of inside bars. This is an inside bar, and then this is a volume gap. So those are two things I want you to know today. But we are not done yet. The next thing we are going to be talking about is liquidity in the marketplace. Now, liquidity is a very broad topic, but I'm going to try to make it short today. So we have different type of liquidity. I'm sure you know what trend line is. So trend line, let me just use it. So this is an example of trend line liquidity. Now, when there is trend line liquidity, we believe that at some point price is going to rally back up and take out the liquidity on this area. Like today, before I entered the market today, it was because of this trend line that I saw that made me know why price was buying. So price bought to take out the trend line liquidity, because trend line liquidity people, they will place their stop loss above the trend line, and as you can see, market took it out, then sold off. So this is an example of a trend line liquidity. We are expecting price to take it out based on what price is doing on the higher time frame. But that's not all. Let us look at, now that's all for trend line liquidity. That's trend line liquidity to the downside. Then this is an example of trend line liquidity to the upside. This is an example of trend line liquidity to the downside. This was where we were targeting price at taking it out. There was liquidity in this area. That was why I sold the market today and price took it out at the end of the day. Price always goes after liquidity. So when you want to start trading for that day, always draw out liquidity. Now, if you've been using trendline to trade before, you're no longer allowed to use trendline to trade anymore. You don't use them anymore. You simply use them to mark out liquidity in the marketplace. Now, another type of liquidity in the marketplace is equal highs and equal lows. Those things that you people used to call double top, double bottom, they are called um equal lows and equal highs. And let me look for a very good example. So a very good example is what we can see right here. All right, as you can see, this low and this other low, they are equal, and it's not supposed to be so. So when price gets to this fair value gap, me, I am definitely going to sell to take out trend this equal lose liquidity that is right there. And as you can see, people will place their stop loss below, and then market will end up taking out their stop losses, leaving them broke. All we do is to look for liquidity in the market, and then we chase the liquidity in the market. Then let me look for equal highs. Now, as you can see right here, although they are not actually equal, but when I see something like this, I consider it as equal highs, because when price sweeps an area, when price sweeps liquidity out of the area, there has to be a sign that price has swept the liquidity out and price is ready to rally. But let me not use that one for the explanation. Let me use something else. I'm using the 15 minutes time frame, but it is on every time frame. Let's use 4 hours time frame instead. Now, as you can see here, this high and this high, they were equal. This is a higher time frame. When you see something like this, you just look for a good entry on your higher time frame, and then you buy their stop losses. There are stop losses on these equal highs. You're buying their stop loss, retail stop loss. We are institutional traders. We are chasing retail traders in the market. Simple as that. They'll place, this is an equal high. When you see an equal high, expect price to run it. Now, when I see something like this, as you can see right here, where is it? As you can see right here, price gave me an entry. This is a fair value gap. When I see something like that, equal highs, I would buy from my fair value gap to take out that stop loss. And that is exactly what you see play out in the marketplace. Now, this might be weird, but that's how it is. Now, I've shown you examples of equal highs and examples of equal lows. I've shown you trend line liquidity in the market. I saw this trend line liquidity in the market, and that was why I bought the market. I think it was on Thursday last week. Yes, Thursday last week. That was why I bought the market to take out the trend line liquidity in this area. This area. And that was it. We took it out. I'm not sure any of you would have been in the group by then. So that is that. Now your assignment. Show me two examples of equal lows, two examples of equal highs, two examples of trendline liquidity to the upside, and two examples of trendline liquidity to the downside. Then two examples of inside bars, different colors of inside bars. Like on my chart, now, there's a this is a this is a pink candle inside bar, and this blue candle right here is a blue candle inside bar. So you have to show me two different colors inside bars. Then you have to show me examples of volume gaps in the market, the arrangement of the candles. When you see that it's arranged in in an abnormal manner, know that there's a gap there. Know that there's a gap there, and that is it. Market, there's a volume gap here. Market simply came there, but took out these eyes, took out stop losses above here and sold. Then this is a confirmation entry for people that missed the first entry. Then you keep selling. That's it. Forex is not hard. Forex is not hard at all. Anyways, that should do for tonight. We'll continue from here tomorrow. Do well to submit your assignment. Two pictures of volume gaps, two pictures of inside bars, two pictures of equal lows, two pictures of equal highs, and two pictures of trend line liquidity. Just be patient. You start executing and you start making money. Just relax and learn. Everything will fall into place at the right time. All right. Have a good night's sleep. Good night.